Ladies and gentlemen, this week is going to be the biggest week in a long time for markets. I'll give you a quick rundown of the catalyst. We have a couple key earnings, 3 to be exact, that will be important for markets, but that's really a sideshow, okay? You're going to get economic data, CPI, PPI, Michigan Consumer Sentiment. You're also going to get the Fed the same day as CPI and a new dot plot. At the same time, you're going to get NVIDIA trading post stock split, and you may see a little bit of selling as some traders take profits following NVIDIA's $500 per share rally just in the last couple of weeks. So I'm here to break all of this down and put this into context. And yes, this could be the week that small caps start to outperform, that Tom Lee is correct, and a 50% rally could ensue, or this could be a disaster of a week for equity markets. So first and foremost, let's start with the easy part. First off, you have some earnings this week. Not a lot of earnings, but some important earnings. Tuesday and after hours, you have Oracle. Yes, that can be important. You have Broadcom Wednesday and after hours. Not as talked about, but Broadcom has done exceptionally well. It's a high-flying AI stock, semiconductor company. If they give you good or bad earnings, that can obviously be important for the entire sector, considering NVIDIA is going to start trading coming tomorrow morning after the split. Yeah, it's going to be even more important what happens on Wednesday. Now, the Fed's on Wednesday, CPI is on Wednesday, so other things are going to happen on that date as well. And then you have Adobe, which is seen as kind of an AI adjacent trade. There's kind of some fear there right now, a couple different things going on. But these 3 earnings will be important for their own respective sectors. Now, as far as the economic calendar for this week, tomorrow you have nothing. Tuesday, you don't have much either. Inflation rate out of China, big whoop. Half the data's cooked anyways. That comes out at 9:30 p.m. Wednesday is really your first big day for economic data and for the Fed. So at 8:30 in the morning, you're going to have inflation that comes out. Now, core month over month, that's the one people are paying attention to. You're expecting a 0.3% number. Last month was also 0.3%, but it doesn't come out as a round number, right? It doesn't come out at 0.2 or 0.3% all too often. It comes out at like 0.22 and gets round down to 0.2, or it comes out at 0.34 and gets rounded down to 3, or 0.35 and gets rounded up, right? There's the rounding effect there. So you can have a high 0.3%, you can have a 0.34 and it gets rounded down to 3, and that's not great. You can have a low 0.3 and it comes in at, let's say, 0.25 or 0.26 and gets rounded up to 3, and that's going to be a little bit better. Now, we're going to see what your major banks think about the, inflation rate, what the number is actually going to be as per their estimates coming tomorrow, and I will share that with you once those estimates are actually published to get a better idea of what decimal point Wall Street is looking for. Your year-over-year core rate is expected around 3.5%. Last month, it was 3.6%. Headline month-over-month expected about 0.1%. A lot of that, most of that's due to the decline in oil prices that you have seen in the last month. Probably not going to be important, but a 0.1% number on headline would definitely be encouraging to markets nonetheless, even if it doesn't matter all too much. The year-over-year inflation rate is expected to stay unchanged at 3.4%. Now, I think some of, the positives, if you will, for CPI and Wednesday is you're expecting the same number as last month. There's a good chance you come in at a low 0.3, like a 0.26, and that could be seen as really good. Now, it's going to be a little bit harder to come in at 0.2. Maybe a high 0.2 could make sense, like a 0.24, and gets rounded down to 0.2. That would also be exceptionally good news for the markets and for the Fed, in which we're going to have the Fed later in the day on Wednesday. That will be at 2 p.m. You'll get the initial statement that will come out. Now, you will get a summary of economic projections, and that is going to be massively important. The last summary of economic projections that we got was on March 20th, 2024, and this is what it looks like. It's the dot plot, where Fed members go plot what they think all these different categories of the economy and inflation are going to be. So what's really important to watch is the federal funds rate projection, as well as the GDP and the unemployment projection. PC inflation, that can move, but really it's all about how many cuts does the Fed think they're going to do this year, next year, and what is GDP going to look like, right? So, and I should say the last summary of economic projections, this one, you actually had the longer run rate go up from 2.5% in the December summary of economic projections to 2.6%. It didn't get much talk. Investors didn't care too much, but that was the first rise we have seen in a very long time for the estimated longer run federal funds rate. So what happened the last summary of economic projections is the Fed was projecting 3 rate cuts this year. Barely, okay? Consensus really was 2 cuts for 2024. So as long as we stay at 2 cuts, that's going to be great. If they lower that to 1 cut, that could be quite problematic. If we stay at 3 cuts, I think that can be good as long as the Fed makes it clear and the data makes it clear earlier in the day on Wednesday that inflation's the reason why we're going to expect 3 cuts, right? If it's because of economic instability or problems out there in the labor market or in the overall economy, that's not going to be seen as good news. So preferably we want to see 2 cuts at least, if not 3, but only 3 if inflation comes in good on Wednesday and the Fed's expecting it will continue to decline, right? Now, worth mentioning, you have also had the Bank of Canada that cut rates first, and then the ECB, the European Central Bank, that also cut rates last week. So the Fed likes to move with other major central banks and vice versa. So when they cut rates, it's a good chance we're going to cut rates pretty shortly thereafter as well. And I think this Wednesday will just be important because, it's the last press conference. It's the last chance that Powell will really be able to set market expectations for whether or not we're going to get a cut coming July 31st, or if that's even a possibility, right? And of course, Powell's going to speak before June 31st, and other Fed officials will as well. And they're going to say they want to remain, data dependent, but we're going to get a pretty good idea of if the Fed will be willing to cut July 31st or not. So that'll be important. Now, the last summary of economic projections, the Fed estimated 2.1% GDP for this year, 4% for the unemployment rate, which we are there right now. So if they expect that to continue to go up, maybe that could be a little, problematic. And the last summary of economic projections back in December, the Fed was expecting an unemployment rate at 4.1%. So you're already at 4%. If it goes higher, that's higher than the Fed's forecast. So definitely want to watch that a little bit more, because if the Fed raises that to, let's say, 4.2%, then that could have economic, consequences, right? PC inflation remained the same for the end of 2024 in the last SEP at 2.4%. Core PCE was revised up from 2.4 to 2.6%. So want to watch those as well. You also want to watch the range of what Fed officials were expecting, right? So in December, a summary of economic projections, on the low side, the lowest dot expected rates to be 3.9% by the end of 2024. Right? The highest dot expected no change at all, no cuts at 5.4%. But what happened coming by March is even the most bullish or dovish Fed official changed their estimate from 3.9% to 4.4%. And that's how you barely came in at 3 expected cuts. It was really like 2 expected cuts. So we really want to see where that, most dovish Fed official is at, because if they raise that, that's going to be, even more problematic. And if I do understand correctly, the dot plot is actually done over the 2-day meeting. So that'll be, Monday, Tuesday and Wednesday. So I'm not sure. I don't believe the Fed will be able to react or change their dot plot after Wednesday's CPI. Now, I could be wrong. We'll get a little bit more clarity on that. And if they are able to change their dots following the CPI, which Probably because they've had a heads up we're going to get CPI now, and the Fed already knows what CPI is going to be like coming tomorrow. Maybe Jerome Powell knows what it's going to be today. So maybe, yeah, it's probably already going to be factored into the summary of economic projections. I think that's a pretty fair bet. But yeah, this is going to be the biggest thing from the Fed in general for, months. This will really have a huge impact on markets. And then at 2:30, like normal, Jerome Powell will get out there and do his press conference. And there will be a lot of questions asked about each of these segments of the summary of economic projections, or the dot plot. Now, beyond that, on Thursday, you are going to get PPI month over month expecting 0.2% and core PPI month over month expecting 0.3%. That's a lot better than the 0.5% numbers that you had last month. And PPI is producer price index, or producer price inflation is a better way to think about it. CPI is consumer price index, or consumer price inflation. So PPI can be important, but I think by Thursday, markets are going to be reacting to the Fed and the dot plot, and PPI may just be something on the back burner, more or less. You do have the Bank of Japan interest rate decision. They have raised rates for the first time in a long time. That was back around April of 2024. They're not expected to do anything with their policy coming Thursday, but we'll see. They have a tendency of surprising people. And then on Friday, we will get the Michigan Consumer Sentiment Survey, expecting sentiment will actually go up again. 5-year inflation expectations are important to watch, expecting 3% there, and 1-year inflation expectations are expected to stay at 3.3% as well. Current conditions are expected to rise a little bit from 69.6 to 70, and Michigan consumer expectations are expected to rise a lot from 68.8 to 75. And one of the biggest catalysts of all for next week will be Nvidia. Nvidia will start trading after the split, and a lot of people that trade these stock splits, they tend to get out after the split itself. Unless they're trying to be a long-term investor, it's typically one of those, buy the rumor, sell the news event. Now, Nvidia has accounted for about half of the gain you have seen so far in the S&P 500 this year alone. So if Nvidia does get a sell down and, some block orders start to come in and sell the stock, then that will be problematic for the broader markets. And Nvidia is at 75 on the RSI. So I think it's probably likely Nvidia does sell down, at least to some degree. And after all, you've rallied what? Oh my gosh, like $500+ per share ever since that low back on April 19th for Nvidia. So you rallied into earnings, you rallied after earnings. 95% of that rally after earnings, I believe, was the stock split, and there's a lot of traders that got in. So don't be surprised coming tomorrow if Nvidia is down 3 to 5%. So that could make for a rough start to the trading week, but I think that will fade. Heading into Wednesday, it's all going to be about CPI and the Fed, as well as that summary of economic projections. So these are all of your major events. I am very bullish heading into this week. I think Nvidia is going to be a drag on markets, at least for Monday, if not Tuesday. I'm optimistic CPI is going to come in lower than expected. And let's be honest, the Fed already knows what CPI is going to be when they do their dot plot. So maybe that gets factored in, and maybe the Fed opens up the door to start cutting rates July 31st. And as long as the Fed is not cutting for the wrong reason, as long as the Fed is cutting because inflation is falling, not because the economy is going into recession or, looking unhealthy, then I think stocks will benefit a lot from that, and small caps can really run, which that is my expectation. I don't think we're going to get a doom and gloom Fed. I don't think we're going to get a Fed that signals, no rate cuts coming anytime soon. Bank of Canada started cutting rates. ECB started cutting rates. I think July 31st is when the Fed wants to start cutting rates to stay a little bit away from the election. I think we're more likely to get a cut June 31st than September because, again, you're getting closer to the election. That's just my personal opinion. The summary of economic projections will be the most important part. But I do believe after the recent sell-off we have seen in small cap stocks, you could be in for quite the end of the week rally, potentially even sending small caps to a new high of 2024, but we'll have to wait and see. Keep in mind, none of this information is financial advice, just my opinions and my perspectives. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys, as always, have a fantastic rest of your Sunday, and I will see you in the next one.